Hello and welcome to the Morningstar Series 3 Stock Picks. I'm Emma Wall and I'm joined today by Felix Wintle, manager of the Neptune US Opportunities Fund. Hi Felix.
Hi Emma.
So what's the first stock you're highlighting today?
First stock is Starbucks. Starbucks we have owned now for many months and about 18 months, and it's a stock we really like. It fits. For us, one of the most important attributes in picking stocks at the moment is quality, and it's a very high quality stock. But there's so much going on at Starbucks. It's not just a coffee retailer. It's really, we feel, a tech company that sells coffee more than anything else. In actual fact, you may be seeing soon in London that they're going to be rolling out their app strategy, which is a click and collect. So you get off the tube, order your coffee through the app, pay for it through the app, and pick it up in store. And they've rolled that out already in some states, in some cities in the States. And what's so ingenious about that is it's not about driving traffic to the stores, it's about processing that traffic quicker. Because you're probably going to the store anyway, but now you're not queuing. So, you know, it's just a really nice problem to have. It's not about driving up business, it's about processing the business more efficiently. But they've also so entrenched with the consumer. 40% of all transactions are done on their loyalty cards. And $18 billion sits on those loyalty cards in, if you like, prepaid transactions. $18 billion is a big number, and we talk about it being a tech company that sells coffee. $18 billion is equal to the estimated revenue of Facebook this year. So the barriers to entry are enormously high, and it's a real monster company which we think is going to be a real long-term winner.
And what's the second stock?
The second stock is Under Armour. Under Armour make athletic wear, active wear, and we like this stock because we have a theme in the fund which is addressing the millennials. And the millennials are now the biggest demographic group in the US, 90 million people. The millennials typically between 18 and 33 years old. And one of the key behaviours that we're seeing in that group is towards health and wellness. You know, think about how many Fitbits you see. You know, the new Apple iWatch is all about heart monitoring and things like that. And this fits into athletic wear. Nike actually just had their results, and they're obviously a direct competitor just last week, and huge order numbers, plus 17%. But so Under Armour is much smaller. It's about $3.5 billion of revenue. But growing really fast. They've done some really smart athlete sponsorships, Jordan Spieth in golf, Steph Curry in basketball, Andy Murray in tennis, and is on a super high growth trajectory. So they're growing the top line at 25% CAGR over the next 3 years, which is pretty unheard of in apparel.
And what's the third stock?
Third stock is Amazon. So Amazon is a company I think probably we all sort of know, or certainly have used their online retail services before. But Amazon is really interesting right now because they have the real growth engine is Amazon Prime. And what Amazon Prime is a service which costs you about just under $100 a year, and it gives you next day delivery. But also, and critically, now it's giving you over-the-top streaming. So just like Netflix, basically it's a competitor to Netflix, but much earlier in its development. So Amazon Prime has about 10 million customers, but it's growing at 50% a year. Whereas Netflix is fully penetrated in the States and is now growing international subs. But whereas Netflix is just about streaming, Amazon is clearly streaming plus next day delivery plus a free Kindle books, etc. There's a whole range of perks. And incidentally, they're now just rolling out Amazon Prime Now, which is not next day delivery, it's this hour delivery, it's next hour delivery. So it's all getting sort of more premium and more premium. But so Amazon Prime streaming hasn't got the brand that Netflix has, or hasn't got the cachet that Netflix has. Why? Well, they haven't really invested in content particularly successfully thus far. But there's one deal that happened recently in the UK which I just think is emblematic of where this company's going, and that was the Top Gear deal. So, the Top Gear team left the BBC and joined Amazon Prime, and that for me just encapsulates in a nutshell exactly where media is going, how media is consumed, and I think Amazon's an absolute winner in that space.
Felix, thank you very much.
Thank you.
This is Emma Wall for Morningstar. Thank you for watching.